Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday, March the 6th. Um, today's been a fairly decent day. We spent most of the day, or I should say most of the morning in a downtrend, and now we're kind of heading back up. It looks like it may end up just being a range type day. And actually, while I'm thinking about that, somebody asked me yesterday, and I may have already answered this. If I did, excuse me, but I'm going to answer it real quick, and I'm going to do the chart lesson. But somebody asked me yesterday, how do you know if how do you know if the day is going to be a range day or a trend? Well, you don't know. You just have to go with what's there at the moment. And, this was the overnight price action. So, um, we were in an uptrend until probably I would say really, you had to kind of play the uptrend until about 8:30 right after the open. And then from that point on, it kind of looked like a range and that ended up turning into a downtrend. And so you just have to go with what's there at the moment. If you're looking at this when you come in, you got to assume an uptrend. And really by the time I got here, prices were in this little tight range, and that's a trading range. It doesn't matter any way you look at it, you got to use the range rules when you go into the range, even though this is an uptrend day. And notice we broke out, we pulled back, it turned into a breakout pullback short. There were a lot of failures to the upside here, and this final breakout pullback short, you had to figure out, you had to assume we're going to test these lows, and that's where we went before we bounced. And then there's your retest of the high off this trend, and then we sold off. And that's exactly, that's fairly standard. You just have to learn to see it and to trust it more than anything. And the other thing I wanted to show you that you can see this kind of a range right here. And if you measure that range, you can see there's the height of it, and you look for where your target's going to be. And you come here and you look, we went a tick or two past it, and then we reversed. So once we broke lower here, that should have been your target right down in here. And guess what? That's right over here where the overnight lows are at. And it's really that simple. But of course, when it's chopping around and bouncing and can't get through, this was really tough here. It took forever to get through this support area right here. And, I really thought we were going to break through this time right here. And they got my runner and had, this was actually what you call a 4-tick failure. And it came back. So I scratched out of this only to see it turn down, but I re-entered right here. Easy move on down. And I almost scratched out again when that one closed right there, but it broke on through, and you see it went right where it was supposed to go, right where I was expecting it to go, and turned out to be a great trade. And that reminds me of one other thing. Somebody asked me yesterday, since I've been talking, mentioned scratching out occasionally, now people think there's some secret in scratching out. And if you hear me saying this and you've asked me, I'm not pointing a finger at you or picking at you, because I've gotten about 25 or 30 emails about scratching out now. And I know that people hang on a lot of my words and what I'm saying, and they're looking for details within the details and details within the words. But to be honest with you, I do not scratch out very often. I've done it more lately. I do it more when we get choppy, rangy type things. But generally when we're trending like this, it's very rare that I'll scratch out. And because what will happen is you'll scratch out only to see it go exactly where you expected it to go. There's no way to know when all this is going on if we're going to go higher, if we're going to go lower. You just don't know. You don't have that crystal ball. And it could easily go higher and break out and fail and come down first, or it may just can't get any lower, so it starts trending higher. And so you can't take a chance. The best way to do it, because I guess what let me make this point. If you try to pick and choose when to scratch out, I guarantee you'll get it wrong every single time. Don't ask me why. It's the law of trading or something of that nature. But if you try to pick and choose what you're going to do, every time you pick, it will be wrong. If you scratch out, it'll go right where you thought it was going to go. And if you don't scratch out, it'll back up and get you. So you just pick one of them and stick with it, and you'll probably have better luck than trying to figure it out. So what I tell people is use your signal bar, put your stop above it a tick or two, and just let what happens is going to happen. Because right here, you could have scratched out or gotten, pushed out of the market multiple times, but notice it never went above that signal bar. That's all the way down here when you got to the key entry points. It never goes above those again until right here after we've made the new low, and then finally it still didn't get above it. Your stop still would have been good, and it came back down, and you got a second chance to get out. So use the stops like we talked about the other day, and don't worry so much about scratching out. If you know you've got this channel right, and that's really an obvious trend line, even if you didn't get the channel right, that's an obvious trend line. And this trend line is just a copy of this trend line. That's all that is exact replica. And I just moved it over, and guess what? It fits perfect. And, you know, you should have had it off these first two swings anyway, and that would have given you every one of these trades down through here, except for maybe that one. So use your trend lines, and don't worry so much about scratching out. Because I promise you'll probably scratch out and get it wrong every time, and you'll be mad at yourself, and you'll learn what I learned. I'm telling you this because I already know, because I've been through that trial and error, and the problem is every time I scratch out, I get it wrong. If I scratch out right here, I scratched out right here, and where did it go? It went right where I thought it was going to go, and my stop was fine. You know, another time you don't scratch out, and then it rallies, and, you know, so you just never know. Just pick one way and be consistent, and you'll probably do better. So anyway, let's talk about the trades. I'm a little limited on time today. Again, we had the uptrend. We broke the trend line here. I took this short right here. This is a breakout pullback short. We were in this little tight range, and you can see that all those overlapping bars, look at the dojis in there, the stems on both sides. We broke below, we pulled back, and then we turned down again. And so I went short right there. And the reason I like this, normally I would have said you wouldn't go short here, but the reason I like this is because look at all these failures that broke higher. You did it once, you did it twice, you did it a third time, and so when it broke again, that fourth time, that's a failed second entry long kind of off this low, and I guarantee you a lot of people got trapped there because most people are thinking we're going to go test the high. It just was a little bit early. It wasn't time yet. So, you know, on a double trap like that, you just about got to go short, and you can see how quickly that one moved down. No big runners or anything, but, you know, hey, that's what you would expect because you're still thinking we may test these highs. You just figure we got to test this low first, and that's what we did. We actually broke a little lower and kind of reversed. Going long right there with a limit order was a great setup. You know, people ask me about that, but I'll tell you about limit orders. Until you got a lot of experience, trade the trades you know that works, the high priority ones. Enter with your stops, and that's right here. That's the ideal place to enter. And you can see it was a quick, easy scalp. And you know, even your runners were safe by entering right there, and you could have ridden this all the way to the top, which is where you were looking for it to go. You don't know if you're going to get another leg up, but that's two measured legs to retest that high, and then that's when the downtrend started. But and this is kind of a reversal pattern. Let me show you this. We were trending up. Then we finally had a lower low. We actually had a lower low here than this one. So we already had a lower low, but when we went down one more and we made a lower low than that one, that's a more important low right there. And then we come up and we make a double top, and then we go down and then we come back and we make a lower high. So now you've got a double top. You've got a little failed break higher above the last high. You've got a lower low, a double top, and then another lower low. That's where you got to go short right there. And you're figuring you're at least going to come down and test these lows, and you might make a measured leg. And you see it was easy. And where you go short was below this bar right here. This is still your signal bar, but when it ticked higher first above that big bullish bar and then turned down, you can have a stop waiting there, and if it feels it on that same bar and you've got enough room to scalp out, that's a pretty good trade. If it didn't and it closes right there, then you really just got an up down bar and an inside bar, and you got to be a little more suspect of it. But be ready in case it breaks through, which it did, and then it's just an easy scalp. And it only got just enough to scalp out. It got its 5 ticks from the entry point there, and then it bounced again. But when it makes a lower high again there, you know, you got to be thinking about going short right here. I really should have made this one green, and I think I'm going to change that to green because it's a little bit more aggressive. But it's really kind of a, you know, this is your real low because you notice we got a little lower there, but this is really like a little failed break and a pullback. This is the same thing as a breakout pullback short. And if something looks like an entry in trading, you know, a lot of times close is close enough. So if it looks like a certain pattern, it'll probably act like the one. And this, you know, you could look at this as a failed second entry long because you got your first entry, you're coming back, there's your first entry, you go a little lower, your second entry, it fails and turns down. So I actually went, and that's kind of a bullish bar. I went short there, and then when this one closed, you know, you're getting too low then, and that's kind of a doji. So I wouldn't have recommended entering down here, but if you saw that that was a failed second entry long, you could have entered right there. And I didn't expect it to go down quite, but that's why you take these trades. You never know, you know, when they're going to take off and when they're not. And this one took off. And, you know, great easy scalp. You could have got a couple of points out of this one. I already had this line in there because I thought this might be, you know, we may get a trend out of that. But when it didn't, I just kind of slid it over. And when it fit on those two swings, I knew then that, hey, we've probably got a channel right here. And you can see it worked both sides. And that this held all day until we finally got a measured move down. And then these two legs here, this is just these two are a measured move of this. So you got a measured move there, you got the measured move from the channel here to down here. So you had a couple of different measured moves. But anyway, that one should have been green. I took it. It was a little more aggressive. I liked it though because it's really a breakout pullback short, and you see it worked really well. It was really tight for this strong support though, so you had to be thinking, you know, you had to be on your toes on that one. So I'm going to leave that one green and say that's a more aggressive trade. Now this one, this is a money trade right here. It doesn't get any better than this. Hopefully you can see this. One leg, pull back, two measured legs up to a known trend line. Anybody should be able to find that trend line. A huge reversal bar that closes on its low. You go short right there, and boom, off to the races it goes. And guess what? Any runners were safe on this one. You could have ridden this all the way down to here, looking for that measured move there. And there it is right there. Easy money. I'm telling you, easy money. And then it's too low to be entering in here. You don't want to enter in there. You know, you want when you get this low and you get this much overlap and you're bouncing in there and stems, you got to wait. But it comes back to the trend line again right here, and you get this doji. You can go short right there. And again, it's a two-legged move. Notice that there's one leg up. This little doji is a correction, and then a second leg up. So that's on a smaller scale. That's a second entry short. And even if you didn't see the smaller scale, you got a first entry here and then a second entry there. Usually your really good second entries will not be better than your first entry. And so if you're using those two, here's your first entry. It's very rare that you get a second entry that's better. So really this entry was based off just the fact that this is strong resistance, and you got these two legs right here. You go short right there, off to the races it goes. It did pull back because it's finding support here. And this one was really tricky. This was a real good setup here, but it got 4 ticks exactly, and then it bounced. And so you might have gotten shaken out when you saw these two. I did. I exited, but then you got another chance to enter right here, and this one's off to the races again. And there you go. And the reason I exited, let me make this a little bigger so those bars are easy to see. The reason I exited here, let me move these out of the way a little bit too. And you can see that this ended, it actually ticked higher. That didn't bother me. I still had my stop up here at the time, so that didn't bother me. Especially when it closed back down here, I felt pretty good about it. But when this one closed as a doji, almost on its high, I got a little nervous then, but all this was a failed second entry long that turns into a great short. And, you know, look at that move. And so you might have gotten shaken out of this one. And really it wasn't a bad idea because you don't know, this thing could have just as easily gone higher. And generally what I would have expected was it probably would have gone up here and broke above this other high and ran everybody's stops and then came down because we hadn't had a trend line break really yet, but you never know. And this was probably good enough for the break here, but we got another test here, and then you get a double bottom, kind of a reversal pattern, and we head up again. But they're still strong. This was support previously, and now it's acting as resistance. We didn't even get up there to it, and there's you another reversal bar, nice place to go short. Easy scalp. You're thinking that we're probably going to test this low. We couldn't quite do it, though, but easy scalp. Real easy scalp there. Didn't take that but a minute to work out for you. Might have got a little hairy when that ended as a doji, but it still moved on down rather quickly. But this is another double top after a failed break above this stuff and a retest. We tested this previous breakout twice right here and it failed. And that's a reversal bar. You can't ignore that. You got to take it. And guess what? It got exactly 5 ticks. So you scalp out with no problems. I believe that was 5 ticks. I don't believe it got any more than 5. 40, 50. Yep, it got exactly 5 ticks from your entry, and that's what you got to have to get out on a limit order with 4 ticks. And I was done by that time, so no more trades after that. And that's well after lunch, really, anyway. And I'm usually, you know, what I'm trying to do lately, if you're new to the videos, is I'm trying to start trading about 7 a.m. and finish about noon. Give me an hour or two to do the video, and then I can be out of here by 1, 2 o'clock at the latest every day, especially with summer coming up. I'm a golfer, and I'll be playing golf and spending time with my kids and my family. And I've got a son that goes off to college next fall, and probably want to spend some time with him this summer. So I'm going to try to get, you know, my goal is to get done with my day and be through with work and not thinking about trading anymore after about 2 o'clock at the very latest. So that's my goal. We all have goals, and sometimes we make them and sometimes we don't, but I'm committed to trying to do that. And you know, once you've done this long enough, it can consume you. So it takes, you know, I spent a lot of years and time, and I have thousands of hours sitting here watching this thing tick over and over and over. And when you really finally start to get it, it becomes boring. I'll be honest with you, it becomes very boring. And so I like to make my money. You know, I do it to make a living, no other reason. If you're still getting thrills from winning and you're getting beat down from losing, then you're not there yet. That just means you're still very emotional. As long as you're emotional, you're not going to make money for the most part. You're going to make too many emotional. It's when it becomes boring and becomes a job and it's not any fun anymore. And when you have a loser, you know, yeah, you just go, hey, I lost that one, I'll get the next one. And you have a winner and you go, and you yawn, and you go, oh, I'm okay, I'm almost making my money for today, my living. And when you get to that point, that's a good sign, because that means that you're getting there. You're getting over the emotional roller coaster ride that comes with trading. And, you know, it's hard for some people to grasp that are not there yet. But trust me, if you stay with this long enough to learn it, you will get to that point. You will get there at some point. So just be prepared. And but when you start to see it, don't be concerned, because it kind of scared me at first. You know, when I first started getting that way, I'm thinking, you know, maybe after all these years and all this work, I don't even want to be a trader. But it wasn't really that. It just you know, after a while, I figured out, you know, it's just boring, and it's not you know, when you don't have the excitement. But you don't make mistakes then. It's mechanical, and you do what you're supposed to do every day, and you reach your target. And a lot of people ask me, how many trades what's your target number of trades per day? I don't have a target number of trades. I have a goal, a monetary goal. And if I get that in one trade, I'm taking one trade. If I get that in 5 trades, then I may have to take 5 trades. And, you know, it depends on how good. If I have 2 or 3 good trades in a row, then I usually take 2 or 3 trades. But sometimes, occasionally, I'll screw up and, lose a little bit, and I'll have to take an extra trade or two to make up for it. So it all works out. So, but anyway, I do not have a target number of trades, but looking at my average for, over the last few months, I'm averaging about 3 to 4 trades a day. I looked at my February, and I think I averaged 4 trades a day in February. I looked at December, and I only averaged 3 trades a day. But there weren't many trading days in December, and I took half the month off, so that probably played a big part of it. But looking back longer term, it's about 4 trades per day, and it'll jump. It'll actually average between 3 and 4. Sometimes it's over time it kind of goes up and down by a trade or so, but long term it's around 3 or 4 trades. So. Anyway, that's enough for today. Hopefully you had a good trading day. Hopefully you could see this channel. That's just as clear as it gets. You may not have found the range. You should have, because you should have been thinking range right out of the gate almost. But it was hard to ignore this range. This trend channel right here. No reason not to notice it. And now we got one working to the high side. And let's just see real quick before I wrap this up, and you can kind of see we overshot that right there. There was probably a great trade right there, because you can see the upper side of that channel, and then we overshot it, and you got that big reversal bar, and I love those setups. And we may test it again because it is a counter trend trade at this point, so we may test these highs again, but I'd be willing to enter somewhere in there. I probably would have dropped me a limit order there. And I may have even dropped one right here. It would have went 1, 2, 3, 4 ticks against you, so you would have ridden out a point to already be out a point. So, but anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.